Well, this is shaping up to be a big week for markets. We're still in the middle of earnings season. So far, about 30% of the companies in the S&P 500 have reported. But this week, we will hear from companies that make up close to half of the S&P 500. 5 of the 7 Magnificent 7 companies are reporting earnings this week. And that's really important because a lot of these names are those that are so closely associated with artificial intelligence. And as we know from recent updates, they have really been leadership for so long. They've helped to propel the S&P 500 large cap stocks to new record heights in recent years. So this is going to be a really big week. I will say so far, we've heard from a number of companies, started with, as usual, with financials, with banks, with some of the logistics and travel companies last week. We've heard from some companies that have had a more cautious tone as it relates to the ongoing war in the Middle East. We heard from some of the cruise lines last week, some of the airlines last week, and they actually pulled back their guidance for the full year in light of what's going on in the Middle East. So we'll see if we hear more about that in the weeks to come. But this week, I think a lot of it is going to be about technology, specifically artificial intelligence. So keep an eye out for that. Now let's shift gears. Let's talk about the Fed. This week is also Fed week. So the Federal Reserve will be meeting starting on Tuesday, tomorrow. Their meeting is always 2 days, and so they will finish up on Wednesday. Now, this is not what we call a live meeting. They're not going to cut rates or raise rates for that matter at this meeting. I will highlight the fact that because of this ongoing conflict in the Middle East and the lingering inflationary pressures, the market is not expecting another Fed rate cut until well over a year from now. So we have a ways to go. Now, that could always change, but this is not a live meeting. The reason that it's important is because this could very well be Jerome Powell's last meeting as Fed chair. So we will hear from him, as always, following the FOMC meeting when it finishes on Wednesday. As always, we'll be looking for some additional guidance around what they're talking about, what they're seeing in the economy. How concerned are they with inflationary pressures that continue to linger in the U.S. economy? But what does Jay Powell have planned for his future? So, as I said, this could be his last meeting as Fed chair. His term as Fed chair expires in May, but his term as governor doesn't expire for another 2 years. So normally when a Fed chair's term expires, they normally leave. But the question is, will that be the case this time around? We think that there is a chance, and Powell has left the door open to possibly staying on and serving out the duration of his term as Fed governor so that he can continue to have some sort of an influence and say on monetary policy. Let's stick with the Fed here because I said this is a big week. And on Wednesday, at the same time the Federal Reserve is wrapping up their meeting, the Senate Banking Committee will be voting on Jerome Powell's replacement as Fed chair. They'll be voting on Kevin Warsh, who President Trump has nominated to replace Jerome Powell as Fed chair. That vote is able to proceed because last week the Department of Justice actually suspended their investigation into Jerome Powell and the $2.5 billion renovation project on the Fed headquarters. And so because of that DOJ investigation, Senator Tom Tillis, who's a voting member on the Senate Banking Committee, he had said that he wouldn't vote to move forward with anyone that President Trump nominated as the next Fed chair until that DOJ investigation was suspended or just stopped altogether. So now that vote can continue, we expect, and the market expects for Kevin Warsh to be approved to take over as soon as mid-May. So meaning that when the Fed reconvenes at their next policy meeting, which isn't scheduled until June, they'll have a new chair in place. Why does this matter for investors? If we just think about it, historically, I don't think that most retail investors have really paid much attention to who the Fed chair is. I think that it's really grown in prominence here in recent years because we saw inflation hit the highest levels in 40 years. We saw a lot of political pressure being put on the Fed chair to cut interest rates. And so I think it's just a much more visible and influential role than it has been in the past. But why does this matter? What's different about Kevin Warsh? I think it is interesting just to think about what this means for the future of monetary policy, potentially. So in his testimony last week, Kevin Warsh talked about what he might do differently. He really focuses on inflation. He thinks that the Fed has perhaps drifted away from their original mandate, and their reliance on quantitative easing is perhaps what got the economy into trouble with inflation in the first place a few years ago. He's talked about it as reverse Robin Hood. You're stealing from the poor and giving from the rich, giving to the rich. He's also talked about it as fiscal policy in disguise, in that you are essentially allowing the government to spend more money because the Federal Reserve is there to be a source of demand for new treasuries that hit the market. So this is what he might do differently. He also thinks that the Fed has been perhaps a little bit too open with investors about their policy moves and what they're thinking. He doesn't like the idea of forward guidance, so he might look to do away with these post FOMC press conferences. We'll see if the market actually allows that. I think it's really nice to hear what the central bankers are thinking. But this is just what's in store. We know that Kevin Warsh might advocate for lower policy rates than Jerome Powell would have. But let's also just remember that even though he's the chair, he is one of 12 voting members at the FOMC. So you can't change policy overnight. I think it'll be interesting to see how he tries to influence it and guide policy going forward. So I shared a lot there. Needless to say, this is going to be a very interesting week. I'll look forward to reporting back next time we get together. But if you have any questions until then, please don't hesitate to reach out to your financial advisor.